Welcome to Early Edge Club, where we break down one microcap or SME stock a day using a simple structured 20-factor scorecard. Microcap investing can be rewarding, but it's also full of traps. Our goal with this series is to help every retail investor avoid the common mistakes and develop a more thoughtful approach when it comes to investing. If you're new here, I recommend checking out the explainer video on how to use the scorecard. Try scoring the company yourself as it will give you real hands-on clarity. Today's section is divided into understanding first the business model, the industry, and then we use our 20-factor scoring, and finally our take on valuations and risk. This company analysis and discussion are part of our internal conversation as we review companies from our ongoing 500 plus microcaps and small cap stocks. We are sharing this to retail investors can build a structured framework when it comes to microcap investing. Just to be clear, this is not an investment advice. Our goal is to help you invest smarter and safer and not tell you what to buy.
So today's company is Alpex Solar. It was incorporated in 1993. It was earlier into some other business, into textile trading and all, but then they pivoted to solar. It is a leading solar manufacturer which is headquartered in Greater Noida. So the company has a state-of-the-art vertically integrated facility which is fully automated, and it is supported by a team of 250 professionals. In addition to solar panel manufacturing, they also produce aluminum frames in-house for their solar panels. And they are now also expanding into solar cell manufacturing. These two steps are very important for backward integration. And apart from these three segments, the company also operates in the solar pump segment, which further diversifies their clean energy portfolio. Apart from this, they are entering into GH2, basically hydrogen based renewable energy. So they are not much into it right now. And in the con call also, they mentioned that it is for the future. They are just trying. They have set up an subsidiary under them, but the capex and their current investment, it is very less. They are not very focused in it, but they are basically want to diversify it into it in the future. So as you can see, these are some of the products which they do. Of FY25 revenue, if we see, 83% comes from solar manufacturing, solar panel manufacturing. So it is currently their biggest chunk, and the rest 15% comes from solar pumps. Moving forward to industry overview. So as we saw in the last company, solar panels is a huge market. It is going to grow by a CAGR of 21% globally. In India, it has a CAGR of around 20%. So the market is very good. The growth drivers are very good. Solar pumps also we saw in the last company. CAGR in India's solar water pump system is 15% for the next 5 years, and we can see the targeted capacity. It is 300 gigawatt right now. We have somewhere between 50 to 100 watt gigawatts. This is the data of 2021. Moving forward, this is which was mentioned in the PPT of the company. So as you can see, the total solar module manufacturing capacity is also projected to reach 500 gigawatts. And one thing which happened is all producers must, this policy was announced, ALMM, approved list of models and manufacturers. All the companies must buy certain products from this ALMMs. One of the benefit which they got was in aluminum frames. So aluminum frames they also produce, and this is also one more thing which happened. So DGTR has recommended an anti-dumping duty on China. So aluminum frames for solar panels which were imported from China, now there is an anti-dumping duty due to which their aluminum cost of aluminum and everything, because they are doing it in-house, it is efficient for them. So it is one of the other factors which is driving their margins, which due to which the company has better margins. And then government of India has also banned the import of solar modules from China. So solar cell, basically they are trying to set up a solar cell manufacturing plant. So it will also help them in making their margins better. And these are some of the other key points regarding the industry. So first we will see section 1, governance and promoter behavior. So IPO was raised in February 2024. They raised 74 crores, out of which 32 crores were for capex, 20 crores were for working capital, and rest were for general corporate purposes. So due to that reason, I gave 5. And moving forward, director and promoter track record. So Aditya Segal, he has been appointed as CEO recently. He is internally promoted. So basically, he was executive director, then he got promoted to CEO. I think this happened last year and last year. So his shareholding right now is 0.39%. It is less, but it is fine because he became a shareholder right now only. Basically, he became CEO recently. A whole-time director, Mr. I didn't check his age. I think he's young. On the side. Yeah,
Second generation, if I'm not wrong.
yeah, yes, yes. But I think education-wise, he is fine because he is quite educated. So I that
Yeah, I did check.
experience, I am not sure if, but
Yeah, he
yeah.
did his bachelor's in US or something.
I think he's young. Mrs. Monica Segal she is the whole-time director, and Mr. Ashwini Segal is the MD. Both of them have major stakeholding in our company. I think the Segal family only has a lot of position in the company on the management level and on other levels also. So basically, there are a lot of members from the family in the company, but it is fine. I think a lot of them have good experience, especially Miss Monica Segal and Sweeney Segal. They basically started the whole company, so they have a lot of experience as of now. So due to which I gave 5. Moving forward to related party transaction. So yes, there were few related party transaction. If you can see, so leasing of property, sale of fixed assets, and pay rent and everything. Rent is fine, I think, but apart from that, there were some. The amount is less, but still there were some. So I mentioned it, and I gave 3 due to that reason. So moving forward to board composition, number of directors, if we see there are 6 directors, out of which 2 were only independent and 3 were family on board. One other was additional director. So because the independent directors are less, I gave 3 here. Moving forward to remuneration, so MD salary, because CEO was appointed last year only, so his salary was not mentioned. So MD salary was 72 lakhs in FY23, then it became 86 lakhs in FY24, and whole-time director also similar path. So the as a percentage of sales, their remuneration was fine, so I gave 5. And moving forward to key person resignation, CFO Mr. Amit Gai had resigned in June 2025, citing personal reasons. And in his place was taken by Mrs. Segal. So she was appointed as CFO. Once again, another family member was appointed in a key position. So I gave 3 because of the resignation of CFO. Moving forward to auditor resignation and change. So no, there was no change or resignation by any auditor. So I gave 5. Auditor opinion and credit rating. So auditor opinion was unmodified. Credit opinion, if we see, so they have recently got the credit rating from CRISIL. So CRISIL triple B minus for long term and CRISIL A3 for short term. Due to which I gave 5 here. Regulatory and legal issues. So there were some direct and indirect tax issues which are mentioned in the RHP, but none of them were there in this FY24's annual report, and there was no reserves or anything for contingent liability or anything. But I still gave 3 just to be safe. Investor communication and disclosure, PPTs were there, con calls were there, but con call of only they had done con call in June 25. For that reason, for now, just I gave 3. Moving forward, financial health section. So business concentration in from FY21 to FY23, that top 5 customers made most of their revenue, and also till FY23, majority of their revenue came from Uttar Pradesh. So due to that reason, I gave 3. Last 2 years concentration I did not get. I think they have, what do you say, diversified into other states. Just Australian premium solar company did. So moving forward to receivables growth, revenue versus receivables growth. If we say it has been fine, but receivables were grew too much in FY24 and FY25. For that reason, just to be safe, I gave 3. Yeah.
Australian solar, like it's also similar, right? The trend is the same.
Yeah, yeah.
Hmm.
Should I check it? Excel
Yeah,
file?
yeah, just check that once.
Yeah. For APS, it was in FY25.
But if you take receivables by revenue, it's again below. I think in that case, it
Yeah,
is,
it is.
yeah.
It is good for both the companies. Actually, it is good.
Actually, for Apex, it is higher. It is around 10%.
Mhm. They had, yeah, lesser.
Yeah. Always look at the percentage terms as well.
Mhm.
Last time when we discussed, we said we will give this as well a 3. Compared to this, Alpex is a much worse in terms of receivables by revenue. 30 is a benchmark, but
Mhm.
about 30, about 25, 30, it's 0, but this is still okay, but needs to monitor.
Yeah, yeah. Okay, okay. So moving forward to cash flow and operating cash flow and EBITDA by EBITDA. So if I say it was negative for last 3 years and it has become positive this year, we'll have to see how it performs in the next year and next quarters. For that reason, and it was a bit low. The average was a bit low, so I gave three.
Can you check
Uh,
this for Australian as well?
yeah. So for Australian, it was negative in FY24, but on an average, it was fine.
Interesting. Okay.
Yeah. Yeah. So inventory trends, it was fine. DSO was fine, so I gave five. Inventory days and cash conversion cycle was fine. I think Australian cash conversion cycle was negative. For this company, it is positive. Yeah. See,
That is also
so
reflected in
APS is
the
better.
operating cash flow to EBITDA and receivables by revenue. So it is reflected in those trends. So you can see, yeah.
Yeah. So capex by revenue was fine. This year it has increased a bit because they are doing capex heavily. So I still gave five because the average is fine. So I gave five here. Debt was fine. Interest coverage ratio was also fine. So I gave five. And just like APS, their liquidity position is a bit low. So I gave three here. ROE and ROCE was also more or less fine. So I gave five. This year it performed very well. So I gave five. Revenue growth, if we say revenue growth has also been very good. I gave five due to that reason. And PAT margin also they have improved significantly. EBITDA margin also they have improved significantly. So I gave five for that reason. So basically, when FY26 started, in just 50 days of FY26 starting, they secured a order book of 1400 crores. So it is a very good order book. So it indicates that they have a strong execution and they have strong visibility too. And next, moving forward to some of their capex, they are expanded their manufacturing facility from a 1.2 gigawatt module line, and they are aiming for 2.4 gigawatt and 1.6 gigawatt solar cell manufacturing line. So this is the capex that they are doing. Currently, they have expanded their solar manufacturing plant, and they are also moving into creating solar cell manufacturing, basically the modules. And if we say they have established Apex Green Energies to drive their EPC and IPP businesses. And they have won recently, they have won 350 crore orders from Coal India. They are doing backward integration by getting into solar cell and aluminium frame manufacturing. Aluminium frame manufacturing currently it is 12,000 metric tons per year. And also they mentioned that they are adopting a debt light capex strategy. Basically, they are funding their capex mostly to internal accruals, and they are planning to raise some funds through equity. But they are planning to keep the debt part of their business very less for capex. And some of the policy tailwinds comes from LMM. So as I mentioned, aluminium, steel, and everything. So anti-dumping duties also. So these two policy tailwinds are expected to boost domestic competitiveness for them. And also, it will, of course, it is a tailwind for all other solar companies too. And if we see for this solar panels, their what do you say revenue per megawatt, it is having. I think it was some policy related decision due to which the per watt cost of solar panel had reduced in India. And currently, if we see the capacity utilization is around 65 to 67%. and their new facilities are already receiving advance interest from all the buyers. Export expansion. So basically, they have kept an hold on exports, just like APS had done, because both of these companies are seeing much more better prospects to operate in India rather than exporting. So both of these companies are currently focused in India only. So this is one of the common points for them. So they are expanding their team, and as I said, they have a very good team. Key management and key executives are from very good experience. Although some of them, although I think a lot of them are from their own family, but apart from that, they are having a team with professionals who have worked in this field for a very long time. And as I mentioned, GH2 subsidiary they had formed for hydrogen storage R&D. They are not focusing on this right now. They have some small capex plan, but they are not focusing on this business right now. And one of the update is they have appointed Rahul Dravid as brand ambassador. It helped them into marketing, so it is a good marketing strategy. So these were the key takeaways from the con call. And if we see our final score, so it comes out to be 82.
Before we deep dive, quick note, we are opening Early Edge Club to a small founding cohort of 15 to 20 serious microcap investors. We are building a research first community where we break down businesses together. Every month, we deep dive into two microcap stock chosen by the community. You will be surrounded by thoughtful, like-minded investors from diverse backgrounds, and we are keeping this group small intentionally to preserve the quality of discussion and make a real personal connection. If that sounds like the kind you want to be part of, fill out the short form linked in the description and we will reach out to you soon. So basically, it's a very new listing, right? It's a very new listing,
Yes,
and
yes.
yeah, currently available at 32 PE, which is good, and 3.4 times market cap to sales. And considering the industry growth, that should be that looks reasonable. But then, since the March quarter results, it has already doubled in
Okay.
price.
Yeah.
Yeah. After the IPO, I think it hit 1,100 and then corrected. Now it's again back to 1,100 levels. So you need to watch how it pans out. Operating margins have been improving. I've listened to Wari Energy con call. They have a bit more
Mm,
better margins, but overall, everyone is expecting the margin to be in the range of around 15%. There is industry tailwinds. They're able to command better margins. And if
mm,
we run Smart Analyze, current price is 1,088. And yeah, if we have 15% margin, yeah, it's almost there.
mm,
Around 1 year forward basis, the price target is 1316. So not much appreciation based on just extrapolating the growth and the results
mm.
here. Yeah.
Yeah.
And but then reverse DCF, let's see, their EBIT for this year is profit before tax is 112. So let's use that. So basically, our return expectation is 20% and terminal growth rate 5%, and taking a time for 5 years and terminal P multiple of 20. If you need 20% return, the company has to grow at 17% for next 5 years,
Yeah.
which is also industry equal to industry growth rate over the next 10 years.
Mm, yeah.
It is a sunrise sector as well, and the industry is also industry is growing at that rate, and
Mm,
it is possible to expect a 20% CAGR over the next
mm,
few years.
yeah.
So looks attractive, and 20% CAGR is a good place to be in.
Mm,
Yeah. So you have multiple tailwinds for the sector.
yeah.
One concern is, will it become commoditized? That's a big question everyone is
Mm,
asking. As product efficiency increases, more manufacturing setup comes up, the
yeah.
cost of producing a solar panel drops by. But
Yeah.
how will the drop is still okay, but then will they be able to maintain that margin? Because that's a bigger question that needs to be
Mm.
answered. So that needs to be closely monitored.
Yeah.
So as long
Because
as
I think globally the prices of solar panels have crashed in last few years. I
exactly,
think
it will still
yeah,
fall
similar.
as more production
Yeah,
happens,
yes.
as more technological
Hmm.
advancements happen. This price
Definitely.
definitely would fall. Price fall, if they are able to increase their process efficiency and margins with the price fall, then price fall doesn't matter much, because you are able to, the cash flow grows much higher. So
Mm-hmm.
that's the whole thesis. So how they're even Warwick on call, they said the
Mm.
prices would fall, and so they are much more focused on the operating margins. So that is what they are much more focused on, and it is going
Understood.
to be operating margin game. Good sector to track. A lot of companies are putting capex, which means there's a lot of demand, and
Yes.
good to have good companies with good management in a portfolio. Is what I would say. But
Mm.
then definitely few of these companies have passed our screening, so we will do deeper research
Yes.
into these companies.
Yeah.
So any final thoughts?
Yeah, actually, both of them are very good companies. But one thing which I found would help Alpex is that so they are also planning similar capex. So I think the con call, the management had mentioned that they have planned 642 crores of capex in the
Mm-hmm.
future.
Mm-hmm.
They are saying that they will do it through internal accruals mostly
Okay.
and equity. So it would be somewhat of a benefit for them. On the other hand, APS would be raising 850 crores, somewhat a
Through
lot of
debt.
it from bank. So that yeah, that will increase for them, and then they would have to manage that. So
Mm-hmm.
one thing that is what I found beneficial for LPEX that they are doing through internal approvals.
Okay. That's
And also, I think they have an automatic robotic facility, a robotic manufacturing plant, which is
hmm.
efficient.
So these go into the second stage of understanding what their competitive advantages are. Now that we know
Mhm.
these companies are good in terms of
Yeah.
the promoter quality, and there's also
Mhm.
structured tailwinds. Next would be understanding what the competitive advantage is, what they're trying
Yeah.
to, how they're trying to differentiate themselves. I hope you found this framework useful. If you follow this company or have any interesting insight, we would love to hear from you. Drop a comment below. If you have scored this company using our 20 factor scorecard, feel free to share your score and how it compares with ours. If you found this useful, consider subscribing and also check out other videos where we break down more microcap companies and SME companies. If you are interested in joining our small research first cohort, the link to apply is in the description below. Thank you for watching, and we will see you in the next one. Bye bye.